Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Brad McMillan, Chief Investment Officer at Commonwealth Financial Network, to discuss investor focus for the second half of 2020 in the face of COVID-19 and a politically charged environment. Brad, thank you as always for joining me on Trade Talks. And the obvious question is, can a second wave derail the economic recovery when we haven't even gotten through the first wave?
Well, that's a great question, and that's what we're struggling with right now. But I think we need to define our terms, Jill. What do we mean by a second wave? And that gets into what you're saying. Is this still the first wave, the second wave? To me, what a second wave means is we see another national wave of lockdowns. In other words, it's the economic damage that another indiscriminate wave of lockdowns would cause. That would be what could derail us. And at this point, although we have outbreaks certainly in a number of states, it seems like we've gotten to a point where we don't need to have a national lockdown. So I think we're going to have a rolling series of outbreaks, but I don't see a national second wave, and I don't see a national lockdown.
Markets appear to be pricing in continued progress on controlling the virus in a relatively smooth recovery. Do you think the stock market, in the form of the S&P 500, as your research benchmarks against it, will finish at current levels or possibly higher for the second half?
I think we might see some appreciation, although I think it's going to be limited. And the reason I say that is this. Right now, as you just said, the market is expecting everything to be okay. They're expecting the economy to come back. And if you look at the projections for earnings, 2021 earnings are actually projected to be almost identical to what we saw in 2019. So from an earnings perspective, we should be about where we were during 2019, which is kind of where we are. So I'm not sure there's a lot of upside there, even if everything goes right. I'm much more concerned about the downside.
Yeah, and do you think, despite the headlines, the risk and the general state of exhaustion from what's been a really wearing year, are we in a better place than anyone expected at the onset of this? As you mentioned before, 2021 looks like what was a fantastic year for 2019.
And that's just it. I mean, for all of the headlines, right now we're hearing about the headlines in different states, in Texas and California. We're seeing the national numbers go up. And there's no doubt about it. This is scary. And in fact, this is every bit as scary as it was back in the real first wave when we saw New York start to melt down. In other words, we've been here before, but at the same time, this time around, we know that it worked in New York. We know what to do and we know it's going to work. We just now have to do it. And that's actually what we're doing. So I think from a national perspective, and even from a local perspective, the notion that all of a sudden we've been here before and we know what's going to happen if we do it right, that takes away a lot of the risk. That takes away a lot of the fear if we actually look at it. And I think from a markets perspective, the markets now know that we can get this under control if we do the right things. And I think the markets are betting that we will.
Yeah, that is a good point. We're starting to see that with some of the rolling lockdowns where it's being done immediately, closing down the gyms, the restaurants, putting that social distancing and mask wearing in place because we've shown that it works in the Northeast. What about the elections coming up in November? I mean, this has to be one of the most politically charged environments that we've experienced, certainly in a more recent history.
That's one of the big wild cards out there, certainly. And that's something we really can't handicap. We saw that back in 2016. We saw the election was a significant headwind to both the markets and the economy because there was just so much uncertainty out there. So part of me says, yes, that's exactly what's going to happen. But another part says, we've already had so much go wrong this year. I'm just not sure how much more fear and angst can be generated into the system. I think people have largely moved past a lot of what's happened. You look at consumer confidence, that bounced back very significantly. You saw business confidence bounce back to expansionary levels. I think people have largely moved beyond a lot of the risks. And I think there's a real good chance that politics, even though it's going to continue to shake things up, may be just treated as one more thing to get through.
Yeah, I mean, how many more shocking headlines can we really handle? I feel like we've been through so much with it in certainly the past, 3.5 years, and of course, 2020. Brad, great to have you with us as always. Thanks so much for joining me on Trade Talks.
Good to see you. Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.